I often get notes from clients with links to articles like this one, where someone's chief investment strategist is saying that the sky is falling, we need to get out of the market. This is just a quick video to go over why we shouldn't be listening to chief investment strategists or really any financial articles that are trying to make short-term investment predictions, because the reality is for long-term investors, these things don't really matter. So in this article, they're talking about the JP Morgan chief investment strategist predicting a 10% drop in the stock market. This kind of sounds like all of JP Morgan's funds and their clients are going to be abandoning the stock market until they get a better entry point 10% lower. But nothing could be further from the truth. If you look at their form ADV that shows what their equity exposure is today, and you look at it a quarter from now, they will own just as many equities now as they did then, because the reality is they manage long-term investments. If you own a house and someone says, hey, I think home prices are going to go down for the next couple months, and then a few months after that, they'll start going up. You're not going to try to sell your house today, then try to get back in 4 months later at a lower price just so you can get in a better cost basis. If you're a long-term investor and you think that the long-term trajectory is higher, you simply stay the course and benefit from the long-term higher trajectory. But these articles are designed to scare investors, and chief investment strategists' primary job is to make extreme statements, because the more extreme the statement, the more publicity they'll get, and that's essentially their job. So looking for similar articles like this one, on February 11th, I came across this one that talks about how all these different analysts and genius economists are really, really bearish on the stock market and thinks that bad things are about to happen. One that they cite in particular is Jeremy Siegel. Here it says, Jeremy Siegel has also warned that stocks' early gains will likely prove short-lived. Then it goes on to say, the Dow Jones could shed 1,000 points once investors realized the Fed could deliver more aggressive rate hikes to crush inflation that's still running way clear of its 2% target. That sounds really bad, but 1,000 points on the Dow is less than 3%. And certainly you couldn't make trading decisions based on someone that thinks that the stock market may drop 3%, because of course the stock's going to drop 3%. At some point this year, history, if history is any indicator, the stock market goes from some peak to some trough down 14%. So again, a 3% swing would not, we're going to get a 3% swing to the downside at some point. So we're not really saying anything we don't know about. We're just positioning in a way that sounds scarier than it really is. To make things even more interesting, so again, this is published on February 11th, Business Insider. On February 15th, this is February 15th here. February 15th, the same Business Insider publication is once again quoting Jeremy Siegel, but here, now it has him categorized as a stock market bull. So within the span of 4 days, this publication said, this guy says to watch out for the stock market because the Dow may drop 1,000. Here now they're positioning him as the bull that says that Siegel feels confident in his forecast that the stock market's going to do better because investors and analysts almost unanimously predicted further downside for this stock this year. When everyone says that, you know they're wrong, he said. He suggested the S&P could rise 20% in the first 6 months of 2023 and end the year with a 15 to 20% gain. So, putting this all together, in this article, this person says that the stock market could correct by 10% by this summer. He could be right. In fact, he very well, it's more likely that it's down 14% because like I said, that's the average. But we don't know how high the market gets first, and we don't know how far it drops once we get there. Then in here we have Jeremy Siegel that says the stock market could drop 1,000 points. That could absolutely happen. Here we have Jeremy Siegel saying that the stock market can go up 10 to 20% in the first half of the year. That can also happen. In fact, all three of those people could be right at the very same time, and we still get to the same place. So again, as a long-term investor, the best thing you can do is tune out the noise, because there is a ton of noise, and trying to sift through all of the garbage is nearly impossible. So essentially, our goal is to stay the course, tune out the noise, and execute on a plan that makes sense for you and your goals. So again, if you have any question about this or anything else, just let us know, and we will be happy to help. Thanks.